This is a Forex Preview. Thanks for joining us at xm.com. I'm Christina Marujos. With me today is Mario Sajigiriakos, Senior Investment Analyst, and we'll be having a look at the Nonfarm Payrolls report out of the United States on Friday. Markets are pricing in 5 Fed rate hikes for this year, with a lot of speculation whether the first one in March could even be a double 50 basis points hike. Therefore, one would say the data would be crucial in deciphering the Fed's next moves, Marios, especially when it comes to the NFP report on Friday. What could we see in the numbers? And do you think they'll be able to give the Fed what it needs to proceed with a hawkish rate hike in March?
Well, I very much doubt they will dare to do 50 basis points in March. They don't want to shock financial markets, although they probably will raise interest rates by 25 basis points. Now, as far as the upcoming jobs data, I think we're going to get a disappointment in non-farm payrolls. So the forecast is for 150,000 jobs to have been added in January. However, because of some statistical and data collection issues, I think we're going to see a lower number. The way non-farm payrolls are calculated, it comes from a survey, right? And those data for the survey are collected in the second week of every month. Now, in the second week of January, that was the peak of the Omicron wave in America. And if someone was out sick during that week and they were not getting paid sick leave, they would be counted as unemployed as far as the job survey is concerned. So I think we're going to have a situation where this will artificially lower the non-farm payrolls print, and we might even see a negative number. Now, overall, that would be just a statistical quirk, right? It wouldn't represent the real state of the labor market. The labor market is very strong overall across almost every measure, right? So if we do get the disappointment, I think that the Fed is going to look through it. We've already heard from Fed officials saying that they expect a relatively weak report because of the COVID numbers during the month, but they would view any weakness as a temporary setback. So we might get a disappointment in non-farm payrolls. I would not rule out a negative number, but more importantly, I think for the Fed will be what wages do. So wage growth is expected to have accelerated, and that's really at this stage in the economic cycle, this is the most important variable for the Fed, because what wages are doing essentially serves like the canary in the coal mine. It tells the Fed where inflation will be in the future, and therefore that will be much more crucial for how many rate increases are needed.
And now turning to the dollar, how could it move on the NFP report release?
Well, if we do get a disappointing non-farm payrolls number, especially a negative number, the initial reaction in the dollar will probably be negative, right? However, I don't think that's going to last very long, and the trading playbook may be to fade the initial negative reaction, right? Because yes, it might be a negative number, but it comes down to statistical shenanigans, essentially. It wouldn't really represent what the labor market is doing, and therefore I would expect any weakness in the dollar to be short-lived, essentially. We might see a dip on the news, but I would expect to see a recovery in the following hours, especially if wages are solid.
Marius, thank you for joining me today. This was a Forex Preview on the NFP report out of the United States, here at xm.com.